Howdy folks, Mark here with Flipside Trading. It's Friday afternoon. We're going to talk about this week's trades ending in the week of April 27th. And this week we're entitled The Fibs Don't Lie. Let's talk about the fibs real quick. The fibs are the Fibonacci sequence, and it's a mathematical progression that's it's prevalent just about everywhere in nature. As you can see, it's in art here in the Mona Lisa. It's in your Nautilus spiral. It's in your different flower patterns, trees and growth patterns, and basically it helps predict the growth of systems. And what we have today in the market is really a human-based system. And these growth patterns that we can use help us identify support and resistance. And once we know support and resistance, we can make some intelligent trading decisions and triggers. So we're going to talk about how we applied the fibs today to our trades, especially in the SPX. And you can see that we have them right here. We'll talk about these two when we get under the hood. And you can see we generated $800 worth of premium this week. We're over 18K for the quarter, not too bad. Over 5% return on investment risk capital. So we're looking awesome. All right, man, let's take a look and let's see what's happening. Let's go over here to TradeStation and we'll jump right in here. All right, that's got us back the other place. Here we go. All right, so the first thing we do, right, we're talking about the trade we wanted to place on Tuesday. So let's take a little revisionist history to see where we're back. Remember last week we went ahead and we called the island reversal, which is right here, right? Island reversal is a bearish pattern, and you can see that we started, moving down. So we're getting ready to place this trade on the 24th, which is this day right here. And so we're in a downtrend. So overall, it says that, we're going to probably be in a bearish type, attitude to see which way it goes. Now, I want you to notice something else. We talked about the fibs. Let's go ahead and emphasize those. Right here at the top of this doji, right, which signified the island reversal. If we take a look at the Fibonacci retracement, it says, look at here. Right here at the 618. The 618 number is known as a hard, fast support or resistance level. So again, right, we have the signal, we have the Fibonacci level, and what happened? It served as overall resistance and the price bounced off. So we're going to use that same type of concept on the lower time frames. So of course, when we look to place that trade, we're thinking bearish, so we're going to go ahead and take a look at the SPX on Tuesday the 24th on a 5-minute time frame. So let's jump down the 5-minute time frame. Let's scroll back here a couple days, get to, here we are on the 24th. Couple things to note, right? First of all, on that day we gapped open, and we're looking to see what happens within the first 30 minutes. You can see the first 30 minutes we had this range. And you can see which way we broke out of that range, and we broke out of that range, basically downward. So when we break out of that downward, we're kind of, sitting here, and we're bouncing off. I'm sorry, the range is down here. So we're sitting and we're bouncing off, and you can see that this range is serving as, in this case, resistance. Now we have this resistance. We're saying, all right, we want to go ahead and have a call credit spread. So we want the price to come up and know it's going to come back down. Because when the price comes up, that's going to give us the most premium. That's going to go ahead and maximize the profit in our trade. Well, right here we have this resistance level, and lo and behold, if we really take a look and put the Fibonacci retracement, it comes right here to 50%. Again, that's that key retracement that serves as overall resistance. So we have resistance from the overall in the morning. It's reinforced by Fibonacci. This is telling us that we can go ahead and take a trade. In the bearish nature, we know that the price needs to be above, 2676. And we set it for, above the big number of 2700. We were at 2705, 2710. And the great thing is that, look what happened. I mean, the market just went straight down. It moved here. So even though much time didn't pass, we were basically at max profit at the end of the day. And the next day, you can see that we just, kind of meandered through. And our 2705 strike was never threatened, expired worthless. That's fantastic. Now let's take a look at the 20. Here we are on the 26th to expire the 27th. Right? We saw that we had, a bullish piece. Let's go back to the daily. I'll show you what the bullish looked like. Okay, here we are, a candlestick. This candlestick right here is also another pattern. This is called a hammer. A hammer is very bullish. So if you open up above the hammer, in this case we gapped up above the hammer, this tells us that the trend, at least on a micro trend basis, is ready to reverse. So therefore, we are now going to look bullish here on Thursday into Friday's expiration. So let's drop down to the 5 minute. We'll look at that gap up. And let's see. All right, so here we are. We gap up again. Let's take a look at what we talked about. Here's our 30-minute opening range. We're waiting for the market to stabilize, tells us where it's going, and it breaks bullish. So now we have the daily candlestick, and now we have an intraday candlesticks intraday price breakout of the 30-minute opening range telling us it's going to be bullish. So we break this resistance. Resistance becomes support. All right, it also aligns with the 34 EMA, another piece of support. Hey, now let's take a look at our fibs. We run the Fibonacci from this to this and it retraced. Hey, we're right exactly at the 618. So now we have three things telling us this is bullish. This is also telling us this point in time, this is probably a good low of the day. That means it's close to our short strike. And we went ahead and set this down. I think we got 2600 by 2595. So at that point, we're over 50 points away. And as you can see, it meandered through and expired worthless. So again, the fibs, right? Not by themselves, but we take a look at exponential moving averages, other support and resistance, and they give us a very, very good look about where and when to place our trades. The last trade we placed was Amazon. Now, as you know, Amazon, let's go ahead and take a look at that chart. We'll look at it first of all on the daily, because it's just kind of crazy in a sense. It's the 5-minute chart. Sorry about that. Let's get the daily over here. Amazon gapped because it had earnings, right? It gapped over 115 points at the open. So the question is, where is a good place for us to place the trade and take advantage of this upward bullish movement based on such a fantastic, blown out of the water earnings report? So if we go ahead and we take a look at the 5-minute chart, and we're looking to see when things stabilize. We look down here, kind of after our 30 minutes, we're kind of here. We broke down a little bit. But the question is why? Why are we hanging right here? Why didn't we come and try to close this gap? What's holding us up? Well, the key thing is that in order to be right, you need to look left. We need to see if there's a support to resistance level that is serving as a pivot point right here at this juncture. So what we do is we go to the 60-minute chart and look at this. Go to the 60-minute chart and we see two very, very key points, right? Activation pivots right here. That's telling us we have support here. It's telling us we have support here. So now we know we can be bullish. We have support and we just need to place it underneath 1571. Well, because the market's pretty volatile and, we wanted to be, smart about things. We went ahead and we placed it down here at 1545. So that comes right around about here, right about here. And so that gives us the overall Amazon trade expired worthless. And that's what we made $800 this week. So remember, right? Look for Fibonacci levels. Look to use them with known support and resistance based on the price action. That'll help you optimize your trade setups and allow us to generate max profit. All right, guys, have a great weekend. Thanks. Catch you on the flip side.